Hi there, good morning. My name is Victor Ali, and I'm the head of investments at Sankore Global Investments. This week on our weekly insights, we're going to touch on a number of things that have happened last week and also just provide guidance on what we expect to happen going into the new week. US markets were relatively unchanged on Friday as traders passed through a batch of Q4 earnings and also looked through the second pair in a widely followed inflation data. On Friday, the S&P was up just 8 basis points. The Dow slipped about 31 basis points, while the Nasdaq added just 2 basis points. However, for the week, the S&P added 1.84%, the Dow gained 0.34%, while the Nasdaq rose 3.09%. Wholesale inflation provided some relief as it declined 0.1% in December, essentially allaying fears around the possibility that inflation was beginning to pick up again as the widely watched CPI number came in at 3.4%, higher than the 3.2% that had been expected, and the month-on-month number was also 0.3%. Last week also a slew of big banks reported earnings for Q4, which was basically a mixed bag. Bank of America posted a decline in Q4 profits. Wells Fargo saw their profits higher for the quarter. JP Morgan's earnings slipped about 15%. Citibank posted a 1.8 billion loss for the quarter and also announced that it will be cutting about 10% off its workforce. Going into this week, the market is closed today for the Martin Luther King holiday, so it's going to be essentially a holiday shortened week. And according to data from Bespoke Investment Group, this week it's historically been poor. As a matter of fact, the median performance of the S&P between 1998 and 2023 has been a 0.3% loss. So the expectation is that this week is going to be a slower week one. However, we will continue to see earnings, Q4 earnings, come out, this week as well. Also last week, the SEC approved, the spot Bitcoin ETF. In spite of that approval, Bitcoin dropped last week, shedding just about 3% during the week. Also, according to industry data, less than $15 million flowed into newly created Bitcoin ETFs. I think for this week, it's largely going to be data on earnings that would shape market direction. But again, because of the holiday shortened week, the expectation is that market performance is likely to be lackluster. Over in China, some data came through over the weekend. Annual exports dropped for the first time in 7 years. In spite of the growth that we saw in December, where exports basically jumped 2.3% in USD terms, more than the 1.7% that had been expected or forecast. We, however, saw overall, exports for the year fall by 4.6%. That's the first decline in 7 years, like I had highlighted earlier. If you look through the data again, or that report, Southeast Asian countries remain China's largest, trading bloc, really, if you will, followed by the EU. However, the United States remains the largest trading country, partner. Trade with Russia grew quite significantly last year. Exports rose 47%, while imports from Russia also rose, 13%. Still in the Southeast Asia region, we had Taiwan had elections over the weekend, and the ruling party, that's the DPP, won the election. Basically setting the stage for what we describe as continued tensions between the US and China, really. China has, labeled this party as a separatist group because the party basically leans more towards, Taiwan's own independence and, doesn't believe in the reunification with China. So this is likely to remain, a geopolitical flashpoint, particularly between the US and China. Again, remains to be seen how things pan out there, but we think that tensions would, continue to rise just on the back of this re-election of the DPP, into office. Still speaking about tensions, really, in the Red Sea, oil prices rose last week, basically on the back of the fact that the US, in collaboration with Great Britain, orchestrated some attacks on some Houthi military installations. If you recall, the Houthi militant group had been carrying out, attacks on, traffic in the Red Sea, basically causing a lot of uncertainty, around this really narrow choke points, which is really very important for, global commerce. So there were some attacks that were carried out last week by the US, which targeted Houthi military installations. Again, the Houthis have vowed retaliation, for those attacks. So clearly, there are tensions in this area. And this is just on the back of the whole Israel-Hamas situation. So from a geopolitical standpoint, a number of things to really continue to look out for, in the coming weeks and, months, really, that can really change things, very quickly. On the local fronts, the fixed income market was largely bullish last week, basically spurred by, an ample amount of liquidity, really. Market open liquidity with about 812 billion. We saw very strong demand at the T-bill markets on the back of the PMA auction results, really, where we saw the one-year paper drop by about 384 basis points. We saw very strong demand. Also, there was an OMO auction last week as well, where one-year paper closed at 17.75. I mean, overall, Treasury bill rates declined by an average of 97 basis points across the curve, during the week. It was also a very bullish week for FGM bonds as well. We, however, saw a bit of a trend reversal in the course of the week, just on the back of the outcome of the OMO results. Nevertheless, bond yields declined by an average of 58 basis points across the curve last week. I mean, coming into this week, the market is still looking out for that Q1 bond auction calendar, as it really would give some direction in terms of movements within the fixed income market, particularly during the first quarter of this year. Also, inflation data is expected to come through today. The expectation is that we should see a moderation in the inflation number coming in from last month. This number again would prove crucial in maybe setting the tone for what the monetary authorities should be looking to do. So again, remains to be seen what action will be taken on the back of that. But these are some of the key things that we'll be looking out for this week. We hope that you do have a very, very productive week. Thank you very much for your time.